Some new value picks for the new year with Tracy Reinick, our value stock strategist here at Zacks.com. And I don't think we've ever talked about this first one, Southwest Airlines.
No. And I picked it because the ticker, LUV.
LUV.
I thought I'd start out the
trying
new
to
year.
show some love,
Yes.
right? Okay.
Yeah, I normally don't like the airlines, so I
was
tend to
gonna ask
kind of
you.
stay away from them. But this one, Southwest, everybody knows it, the regional airline. They're known mainly for keeping the low costs and not charging for their bags, which everybody loves. But interestingly, they are a growth story right now. They've been expanding into Latin America and the Caribbean because in 2011 they bought AirTran, which had all these routes down there. So they've been integrating that. The analysts really like the integration and think that it's moving along at a good pace right now. So they're improving their technology. They got a whole bunch of new routes. Houston's going to be their main airport to go down to Latin America and the Caribbean. They will be able to be competitive in those routes, especially with the low-cost model. And those are the emerging markets where there's a big middle class growing who's going to want to travel to the U.S. and Americans are going to want to go down there. So it's an interesting story. They had big earnings growth this year already, and they're expected to grow earnings another 78% next year, which when do you ever see airlines growing earnings like that, especially when that's been around a couple decades.
Especially when they're not charging extra for stuff.
Well, right, for the luggage and these other little things that the other airlines have to do to mainly make revenue. So yeah, the story is real good with them. The stock is interesting because it's well off its 3-year highs. I put up the 3-year chart here, and it's near a 52-week high right now, but still cheap. It's only trading about 10 times. It's definitely a value play. You get a little bit of dividend, not much. It's under 1%, but it's a little added bonus. But yeah, I kind of like this play as an airline stock.
Okay. This other one that you've picked, I've never heard of, I have to admit, Stewart Information Services, STC.
Yeah, this is a small little company that is a title insurer, mortgage and title insurance. So most people have never heard of them, and why would you? But interestingly, it's a play on the housing market recovery because title insurers, they do all their businesses based on volume. So if you refi or you get a mortgage, you got to probably go through these kinds of companies.
Right.
So refis are really hot right now with record low rates. People continue to try to get their mortgage and their interest rates down. So they've had a great year. Earnings are up like 150% this year. But the question is going to be next year, 2013. You can see the earnings declining a little bit expected to next year from this year. It's about a 5% decline because I think the analysts just really don't know what to expect with the housing market. This was a great year. They expect volumes to continue to improve next year. We're hopeful it does for the economy's sake too, and that will help a company like Stewart. But right now I think the analysts are being kind of conservative in what they see the growth like for next year.
Also starting to see a little slippage in mortgage applications in the last month.
Well, right. So these kinds of things will affect a company like this.
Right.
So I do think the analysts are being conservative on what to expect. Valuation-wise, they're trading around 10 times as well. So they're not real expensive, but they've had a huge run-up. You can see us have put up a multi-year chart on this one. The stock was just basically dead money during the housing bust. Why would you want a title insurer? And then as soon as things started to turn around in 2012, investors figured out, hey, these guys are starting to make money again. Let's get in there. And the stock really took off. It's had this huge surge, but again, it's not very expensive here even after this surge. So 10 times it pays a little bit of dividend too, not much, but you do get a little divvy here. And it's an interesting, different kind of play on housing recovery.
Okay, do you own either one?
I don't, but the value investor does own the Stewart Information Services.
Okay. You can find other stock pick ideas on our website, Zacks.com. If you go to the homepage and scroll down to the Zacks number 1 rank strong buys or strong picks section of that homepage, find all kinds of stock picks there for your consideration. With Tracy, I'm Terry Ruffalo.